A very good afternoon, good morning. Welcome to the daily sentiment session with myself, Giles. Hope everybody is well. If you could just let me know that you can see my screen and hear my voice okay, that'd be great. Lauren, Mark, hey Nadia, hey Ryan, Osho, Stephen. Yeah. Morning, everyone. Hey Sue. Yeah, good. Excellent, excellent. Right. We have quite a lot out there going on right now. There's quite a few bits and bobs for us to go through. And the other thing we need to be aware of is we're just coming back off the. Hang on, sorry, Siri's decided to start speaking to me. Let me just get rid of Siri.
I found this on the web.
All right, thanks, Siri. Okay. We're back off the US President's Day, and we've got the Chinese Lunar New Year going on. And we've got some sort of important data coming out. So in other words, we're sort of in a risk-off mood at the moment, but that can change quite quickly. We're in a sort of transition from holiday back to normal sort of day-to-day action. So just be conscious of that. Remember what we're looking at in this session is what's the macro fundamentals and what's currently going on with sentiment, and can we have a technical opportunity in a trade that makes sense? That's really what we're trying to do. So there's a lot to go through this morning. So let's get stuck in. Yeah, very nice, Stephen. I'll look at gold as well. There's a little level that I've got for gold as well that's worth looking at. Well done, Stephen. Okay, so let's get stuck in. So the first thing we want to look at when we come to the session is always the opening news for the daily European session. The first thing to notice, stocks are mixed, right, in the extremely thin conditions. When you have thin conditions, it's very hard to trust breakouts or moves in the market. So just keep that in mind. But you never trust a breakout on a holiday thin day. So really, we're sort of reassessing where markets are at today. Risk sentiment deteriorated shortly after the open, and we've seen some yen strength today. We've got Trump speaking in Iran talks indirectly. He says that Iran are bad negotiators, so there's geopolitical risk constantly out there today with Trump and Iran. And European equity futures are indicating a subdued market open. But remember, US President's Day and Lunar New Year holiday. So we're coming back to normal market activity. If we just take a look around, get equity markets, okay, futures markets are broadly down. FTSE 100 is up, volatility is elevated. So it's kind of a risk-off lean in the stock market. In the bond market, there's a steady bid there that's been building. Okay, so bond markets are bid, risk-off trading. Commodities are lower. Iron ore's down, commodity index is down. Brent crude, gold, there's some geopolitical headlines hitting oil with the International Energy Agency about to, potentially talking about inspecting Iran's nuclear facilities again. That's a pressure on oil, but you can see gold, copper, silver all down. China is the biggest purchaser of copper at the moment. They're on holiday, so there's nothing to really support them at the moment. The dollar saw a little bit of upside yesterday, seeing a little bit of downside today's session, and we're stuck within this range. Okay, we had this false break of this inside bar in the euro dollar, and we were looking at yesterday this potential false break of a Harami inside bar. But because the holiday conditions are thinned, I wouldn't necessarily take that with a lot of conviction that it's trying to break lower. So I'm still keeping everything kind of open technically because we've had such holiday thinned conditions, right? And then if we have a look in the currency space, see a couple of outliers. The yen is the strongest, risk off trading, and there was some talk about interest rate hikes coming from the Bank of Japan. That's just supporting the yen. The pound is selling off after the UK labour data. The rest of the currencies are sort of bunched together with a slight bias towards the Antipodeans lower and risk off currencies slightly higher with the yen and the Swiss franc and the dollar sort of trying to push higher. So we've got a risk off lean, but um, I'm expecting risk to really reassess as we go in, as the US traders come back into the market. So what I'm looking for here is what's going on in the data. We've got some data that's worth giving us an opportunity. So the first one is the pound, right? So we can see unemployment
Next up on the schedule in just under 10 minutes time.
Up at 5.2% for the UK. We've also got average weekly earnings coming in below market's minimum expectations and employment change falling below what markets were expecting towards the low end of expectations. So there's weakness here in the UK labour market. If we look at short-term interest rate markets, you can see there's a drop in expectations, and now there's an 85% chance that the Bank of England will be cutting interest rates on March the 19th. That does give us that sort of pound sell bias, and that keeps the euro pound upside bias for the swing trade perspective. And if you look here at the euro pound, you can see we're trying to break above that near-term trend line on the hourly chart. Yeah, you got average weekly earnings coming in, but the major driver is going to be tomorrow with the UK inflation data. This is the one that market's going to be waiting for tomorrow, but that is expected to drop sharply lower. So we're seeing a little reaction now, but this is the one that's going to be in focus, inflation data. Yeah, well done, TM. So I'd expect that euro pound buy bias to remain. We've got some employment data, some German economic zoo data coming out for Europe, which is expected to be higher. So this is, you can see economic sentiment expected to be well into expansionary territory. Consensus of 65, right, above the prior 59.6. So that should give the euro a little bit of a lift. And in terms of short-term opportunities, I've got a buy bias for the euro dollar here at the 1.1846 5-point stop, trying up to 3 times. And now I know we had a minor false break of this area, and I know we've had kind of a potential, normally that would be an invalidation as we broke through here. But actually what we got yesterday was a near inside bar, and that trend line is potentially still being supported. So for me, given the situation and given this style of trading, it's not unreasonable to have a 4 or 5 point stop here with looking to potentially go back into that trend area. And that's just based on the expectations that this German ZU data is expected to be positive. Now, in terms of the euro pound, right, the buy bias remains. And what I'm looking for here, I'm just trying to see if there's a easy. Ultimately, the target is the A800. That's what I'm looking for as my target. We're going back above this trend line, which is that crucial trend line we've mentioned here. That we've broken above that. You can see the yield spread, right, is now climbing again, dragging euro pound higher. This is what we're expecting because we're expecting slower wages. The Bank of England themselves, they were expecting unemployment rate to be at 5.3%. So here it is coming in at 5.2%. That is like a 4-year high or something, you can see. So that's giving the Bank of England the green light to cut interest rates. The ultimate green light will come from inflation data tomorrow, which is expected to be lower. So the logic towards euro pound upside continues to make sense. And this is what we're expecting is the wage data to confirm it and the inflation data to seal it, right? Now, in terms of opportunities, intraday opportunities, it's a bit tricky because of the spread with the euro pound. But you can see you've still got this, got this coiling kind of price action building. For me, I think as long as you stay above this area, you can stay with it. Get under, you can get out. So stop, if you wanted to be a bit more aggressive, you could enter here and you'll stop just running under the 8,700. But otherwise, I'm staying in as a swing trade for now. Right, the euro pound. If you wanted to try and get clever with it, you could look at a potential trend break. But what's going to happen is that's either going to be made or that's either going to happen or not happen on the German ZU data that we've got coming up in a few minutes. So it's a bit more of a lottery. So for me, I'm just going to keep the swing trade. If you get dips, I'd expect that to be bought. So That's my perspective on the euro pound. And the short-term trading opportunity that I see in the euro dollar is just here. Now, it's not that there's a reason particularly for dollar weakness right now. We've got quite a lot of data coming out. You've got ADP data coming out at 115. Yeah, just manage your risk because remember I'm looking at it from a swing trade perspective. So one way, if you wanted to re-enter it quickly, if you got weak inflation data tomorrow, that might be sort of surer entry. We got 115. We got because that's going to be the deal. That's going to seal the deal or otherwise. And markets might just chop around waiting for the CPI tomorrow, TN. So I would be cautious of getting involved in euro pound today. The ADP jobs data is coming out at 115. Let me just, yeah, 115 UK. It's not on this calendar. We've got ADP jobs data. Now that will get markets' attention because the ADP data, right? Let's have a look. If we get very weak jobs data, that could give some dollar downside. It should remain positive today, but the problem is, Ram, is this ZU data that's coming out in 30 seconds is probably either going to give the euro a push otherwise. So if you get positive ZU and we've had a negative labor data, then you should have euro pound upside. For me, I wouldn't be trading it intraday because the moves are kind of potentially going to be minimal. And it's going to be based on a swing trade euro pound upside bias, but not intraday. Is my take on it, Ram. Right. So let's just see what the ZU data is for the sake of completion. Waiting. Let's have a look. Still waiting for the data. That's disappointing and lower than markets are expecting at 58.3. 65.9. And that's ground consensus. So that is more disappointing as a print, right? But I would expect the euro pound to find dip buys, right? So I wouldn't say that's going to change the outlook. So now, it might not be unreasonable to look now for a trend. If you get a trend line break on that, on the euro pound, I'll be more inclined to go long intraday now that we've had the weak data, just because we're through the data. It's not that it's obviously a positive reason for the euro pound. It's just that we're through the data. Okay. So next focus will be the ADP at 115. And what else have we got? And then we've got Bar speaking at 5:45, Daily speaking at 7:30. Okay, so from 115, we should get a clearer sense of where the dollar's heading. Euro pound, you've got mixed moves now, and the next focus is going to be the CPI tomorrow. So I would leave the euro pound now because if you were desperate to get into it on a trend line break, fine. Yeah, bit of pound weakness can help support the FTSE, you see. And that's because a lot of UK companies have their earnings in dollars. So a weak pound tends to be good news for the FTSE. Let's have a look. I think the only sort of way that I would look at going into the FTSE would be in a breakout. So maybe 10-point stop, going with the break, try up to 3 times, something like that. That's the only way I'd look at that. Okay, so that's what I'd look for that now, Jam. Apart from that, I'd just stand aside, go with a breakout only. The pound should keep weakening. That's what I'm anticipating. So that should lift the euro pound. And although that data is weaker than markets are expecting, it's still positive territory. So the current conditions, 65.9, they're around consensus. So, okay, I think the markets will be able to just look through this and carry on. So I don't see any reason why not to continue with the potential euro dollar upside from this area here, right? I don't see that violating it, and then the ADP jobs data will become focus later on at 115. I think the market's going to be trying finding its feet after the holidays. That's basically what I'm expecting, and it's too early to see where the dollar's going to go. I know ING are seeing the dollar retracing this week, in the absence of any significant data, with the PCE data coming in on Friday. So it may just be choppy. So that may just be what we get. Okay. So going through the rest of the calendar, we've got a few things to note. So the first thing we've got Canadian inflation data. Now, the perspective from the market on the inflation data is that the Bank of Canada is expected to be on hold all year. If you look at expectations, it's just kind of flat for the whole year. That means an outsized inflation print could see a reaction because markets will be forced to react to it. And the TRIM reading is the Bank of Canada's preferred measure of inflation. So what you were looking for here is something that's all hot or all cool across the board. So if you see like everything moving lower, below market's minimum expectations on the month-on-month, year-on-year, median TRIM, then you expect the CAD to weaken. And so I'd look at something probably like maybe CAD yen downside. So if you get month-on-month 0.2%, year-on-year coming in 2.2% or lower, median 2.3% or lower, TRIM coming in at 2.5% lower. If everything's just a miss, yeah, across the board, I'd be looking for the CAD to weaken, and I'd look for a strong currency, and I just check what the strongest currency is at the time. At the moment, we've got yen strength, so it'd be CAD yen selling. Now, if we get a super hot print, so if this comes in 0.4% or higher, 2.7% or higher, 2.7% or higher, 2.7% or higher, so if it's a beat across the board, I'll be expecting CAD strength, and I'd probably pair it with either the dollar or the pound. Right? So that would be dollar CAD downside or pound CAD downside if we see a hot print as we look for inflation. And we also have coming up overnight the Reserve Bank of New Zealand monetary policy statement. And the expectations there is that inflation's been picking up in New Zealand. So what analysts are looking at is, do the RBNZ revise higher their official cash rate and inflation projections moving forward? So there's no change expected, but it's all going to be about the projections. And if they do revise higher their inflation expectations, that should impact interest rate market expectations. And the risk is you see some New Zealand dollar strength against the Aussie dollar overnight. So what to look for, we'll be looking for a potential Aussie New Zealand dollar. Right, so you've got this trend line. If you have reasons for New Zealand dollar strength, you'd expect Aussie New Zealand dollar to fall, and you'd be looking at a retest of this trend line potentially would be one area to be looking at. Let me just check that that's, just want to check that that's okay. I want to just do this slightly differently. Let's have a look. Right, so there's one area that really stands out, which is this kind of value area high and value area low across the time price opportunity across the Aussie New Zealand dollar. So what I'll be looking for here is this region here. Right? You can kind of see it's an obvious kind of bottom, right? What we'll be looking for here is if we get a high revision of inflation data moving forward, then look at this region here for shorts. And what you'd be looking for is, I'd say, I give it like a 30. And if you get high inflation data, try and enter up to three times with a 13-point stop at this region here, the big round number, the 1.1700. Right, that would be the area, okay? But that would only be if we got a high revision on inflation expectations. And that would be valid for tomorrow as well. So we'll also come back tomorrow. And remember, before the meeting tomorrow, we've got the inflation data. Now, again, this is another opportunity for potentially scalping, right? And what we're looking for here is something that categorically and specifically gives the Bank of England permission to cut interest rates. And what you want to see this is a miss across the board. You know, year on year, 2.8% or lower, month on month, minus 0.7% or lower. Services, 4% or lower. You know, the closer that is to 2%, the better. Year on year, 2.8%. And if you see an outsized drop in the CPI services print, right, that markets will pay particular attention to that aspect because it's been services inflation that's been keeping the Bank of England elevating interest rates for so long. So if you see an outsized drop, you want to see all these PPIs coming in lower. You just want to see a drop across the board, and you want to see minimum expectations missed, and you want to see priors either unrevised or revised lower. That's what you're looking for. Okay. Now, the best pair are probably the pound dollar. So I'd probably look to scalp the pound dollar or re-enter the euro pound looking for that 0.8800. So scalping pound dollar, sort of slightly, longer, sort of more stable trade, look for euro pound longs. If it's really hot data, say the surprises to the upside, that will also have a reaction as well. And then you could look at simply buying the pound against the weakest currency at the time, but probably scalping the pound dollar higher would make sense. Okay, that's what I'd be looking for on the CPI. It will be volatile for the pound because the markets are waiting for this print to give them the permission to cut interest rates, if that makes sense. So you can see there's a lot of, okay, euro pound back above this trend line, then longs are reasonable. Euro dollar, what I'm looking for is this area here with a 4-5 point stop, just try up to 3 times. If you hit 20 points, take 50% off, right? And then leave the rest at break even. This will be the weekly ADP should. It's not that, got to listen, it's not that I'm really wanting to sell the dollar today. It's just that I'm still seeing technical validity from that minor false break of the Harami inside buy yesterday. And yes, we're trying to break under that trend line, but it was on low volume day. US are away, China's on holiday. There's an absence of US data really coming out. So it could go either way, but for the risk, it's absolutely minimal. So we'll be happy to risk today because the US participants are coming back in, right? And that's an obviously nice area. You've got a swing point, you see? You've got a swing point here, here, here. So essentially what you're saying is stay above this area long, but get underneath that area short. That's basically what you're looking at, right? So it's kind of something like this is really what you're looking at. All right, this is just the perfect area. So you're just limiting the risk. This is kind of your turning point because it's either a failed break or we're going to get, either way, right? But this is kind of your line in the sand here. And although we've had the German data, and I know it's weaker, it's just this is not a major focus of markets right now. So it's not like a really, really big influential data point that's going to massively impact the euro, but it does give a little bit of a downside bias right now to the euro because of it. Okay. Yeah, good question. So you play the CAD data after the ADP. So the ADP will be a 115. And then say the ADP is really, really weak, right? And you see some dollar weakness come in, then you'll be wanting to trade dollar CAD on a strong CAD print, right? So strong CAD print, then you'd be looking for dollar CAD downside. So just have an eye at what the ADP is. And then TM, then you want to go back to your currency strength meter. Let me just share this with you. Right. So if anyone doesn't have that chart set up, it's here. Just circle back and see which the strongest currency is at the time. And with the ADP, just see what's happened to the dollar at 115. And you could still play it post the ADP data. Does that make sense, Tim? The slight difficulty is there's a lack of drivers really out there is the problem. Right? There's not a whole load of drivers. So we're waiting for everyone to come back from the holiday. So this is a legitimate trade idea. but don't go around risking too much in a market like this until we get something clear. With gold, for instance, the other level that I see for gold, just on this kind of residual strong buying we see, is if we can get back up to this level, right? Again, it would probably be something like geopolitical risk, which would trigger it. And I'd be looking for try up to 3 times, breaking that trend line, breaking that swing point at the 50-50. Aside from that, I'm just going to stay out of this noise, right? You've got this kind of condensing price action. It's kind of grinding higher. The dips are getting bought, but it's it's unclear market moves. Okay, we want to see something clearer. We want to see something obvious. So really, what I'm saying on a day like today, there isn't really anything obvious out there. Euro dollar upside is fine, right? Can try, up to 2 more times. That would be a stop here. So you try it up to 2 more times at that level and then leave it, right? The ADP will probably push it one way or the other. So really today is like a day of just like preserving capital and only taking small technical trades and then waiting to see what the mood is like when the US traders come back from their holiday. At the moment, this is holiday thinned trading. Okay, folks. So there's quite a few. It's quite choppy. My experience in a day like this, only take the most obvious technical trades, stay out of unnecessary trades, and wait for a clear catalyst to come. It'll either come from geopolitics, it might come from a RBNZ rate decision overnight, it might come from the UK CPI data early tomorrow morning. It could come from the ADP data. We've got a series of data points coming out, and this is the lull, right, before we get some kind of direction and clarity. So that's the way I do it. That's the way I manage it. Yeah, TM, and there isn't really much data to make that happen, and that's partly the problem, right? That's exactly it in a summary. And you can see you're getting mixed signals here. Is that a breakout to the upside? Is it going to be a false break? Never trust a break on a holiday. So like if this was a normal state of affairs, you'd be like, oh look, we've sort of broken this trend line on the Dixie. We're clearly heading higher. But are we? It's like holiday thin trade. That's a breakout, right? On holiday. Never trust breakouts on holidays. That's the received market wisdom, right? So this could just be a nice fake out and it's going to, drop, 20, 30 points lower as soon as US traders come on. Likely the ADP will be their first bit of direction. All right. So just keep hold of your capital. Clarity will come. It's just not there yet. All right, folks. Does that make sense? It's a tricky day today, is what I'm trying to say. No, you may not be happy, right? You may be, oh no, Jam. Yeah. Right, super. Thanks, Najam. Yeah. Thanks for brightening and lifting the mood. Yeah. See you later. See you, folks. RAM, then look for your swing trades. So something like the euro pound RAM is a really nice trade, right? Or the Aussie New Zealand dollar, depending on what we get overnight. Okay. So if you don't want to scalp and you're looking for a swing trade, this euro pound is a swing trade. And like entering it, taking out the 8718 would be fine. Or even at market ahead of the inflation data tomorrow is expected to be soft. So you're trading into expectations. Okay, folks, take care for now. See you later. Bye for now.